We got a hot inflation reading on Friday. Kevin is in Miami as we speak. You can hear the sound of those waves and the wind in the background, but that doesn't mean we're not going to push forward with today's show. As we get into it today, please hit that like button, subscribe to our channel. Remember, nothing we say is financial advice. We are not financial advisors. We love talking about the markets, and that's what we're going to do today. So please, when it comes to any buys or sells, do your own research, make your own decisions. We're just here to kind of give our takes and updates on the market. Kevin, we can't see you, but I know that you're there. How are we doing today?
Doing great. I'll turn on the camera for a second just so y'all can see that I'm actually in Florida. There I am. See?
There he is. Right, Kevin is safe. He is not being held captive or anything. You got those beautiful palm trees behind him. So that we're going to jump into it for the day. We had PCE data on Friday. Under the radar, we also had data. It's interesting when these reports come out because usually it's multiple reports in a day. There's like the headline one, but there's other ones as well. And on Friday, it was PCE, it was consumer spending, and it was wage growth. And PCE came in hot, like not just hotter, like higher than last time, but like a fair bit hotter than expected. Expected was 5.0, came in at 5.4, up from 5.3. So we're starting to see that consumer expenditures are going up like we discussed it was going to be. We also saw that consumer spending was higher and it outpaced wage growth. So we already know that credit card debt is an all-time high. People are continuing to spend at a high amount, but it's not proportional to their wage growth. So, Kevin, is that a good thing or a bad thing?
It's a terrible thing. It's the end of the world. So it was just a trifecta of everything just being perfectly aligned to everything that we had been saying. Since the unemployment data came back in January, we were kind of saying like, this doesn't seem like this is a pretty good scenario for the macro going forward. But the markets obviously were saying a different story. Everyone was super bullish for 2 months. I mean, people are still bullish right now, even despite some of this data. We saw some green earlier in the stock market and some Bitcoin. Obviously, it's trading back and forth now, but yeah, it's just that those three data, the data that came in for those three is absolutely the worst combination of the way you want it, and it just shows that retail is pretty much holding up this bubble. Like once they don't have the money, you have no chance of it going any further. The gains are probably just going to get depleted. But retail is absolutely spending way too much right now, and I don't think it's going to be. Obviously, I don't think it's sustainable the further that consumer credit also increases.
Yeah, we're clearly seeing that people are continuing to dip into what, there was a report that came out, I want to say it was like 3 or 4 months ago, that like everything's fine. Savings accounts have more than they've had in years. Well, I think that narrative is starting to fall by the wayside because people are clearly dipping into their savings account to pay their bills, to pay their credit cards, all of this stuff because debt is so crazy high right now. So this once again kind of reaffirmed my bearish feelings on the market. I do not think that we are going to see anything good coming in the near future. We've seen an increase in what people are pricing in as far as interest rate hikes go. I'm seeing some discussion that we'll get another one obviously we're going to get one in March, probably one in May, like we discussed last week in June, and then maybe a pause in July. And I think that pause could go through the end of the year. That is what it feels like the market began to price in last week. I think that the probability of a 50 basis point hike actually came down a little bit. That doesn't make any sense to me. And I think that we're going to see, here beginning March 10th, when more of those headline numbers come out, a not so great picture of what is going on. So for the week ahead, it is one of those weeks where there aren't any of like the huge reports. There's no unemployment data, CPI, PPI, CPE, none of those things. But if you can pay attention to it, there are a lot of data points that are going to come out around consumer goods, around housing, and those things are really important, but they don't get the same attention that these inflation readings get. However, if you can kind of read between the lines, if you can look at some of these readings, it can paint give you an idea of what we may see in the inflation data, and that can get you out ahead of things. Not that, I'm not much of a trader. I've been doing a little bit with crypto, and it's been going well so far, kind of selling ETH in the 1680 to 1720 range. because I do think that as we see data come out this week, it's going to paint a picture that the numbers are going to come in hot in the coming weeks. Prices are going to go down, and I'm going to be able to buy crypto at a cheaper price. Is my current take on it. We're also going to have speeches from, talking hear talks from some of the other members of the Fed. I think there's going to be, Tuesday, Wednesday, Thursday, Friday, every single day there is going to be a different Fed president speaking somewhere around the country. So we're going to continue to get little pieces of news here and there, and that is probably going to move the market, those speeches, more than the data that we get. But it's an important time to pay attention, even though there aren't those headline readings coming out.
Absolutely. I mean, we got data today on pending home sales. It was projected to be at 1%, came in at 8.1%. That's a huge miss. Like, that's so hot to the point it just shows that retail still has money in the market, and they're still able to spend. And that's not necessarily the greatest thing going into hot PCE data going into March. The worst thing I think that could potentially hurt the market, and I think we are seeing a bit of a pivot here, because obviously it was 5.3% last time, and then this time it came in at 5.4%. That might be the pivot that people aren't excited about, that inflation is spiking. We did get an inflation spike for using that PCE data. But if we get a 25 basis point hike in March, despite all of this, that's going to be catastrophic. I don't like it. I think it should be 50, obviously, to calm whatever is causing the price to go up. But this would be absolutely just destroy markets. I think a lot of people who are hoping for a bull run might just absolutely just see capitulation at some point in the next 2 to 3 months.
Yeah, I keep hearing this narrative that, the bull run for the second half of this year could still happen if we get the rate pause and we hear from the Fed that they're going to pivot.
No,
I don't see that the data to support that coming in. Like, we're still, we're a year into the war in Ukraine, and we're still seeing consequences from that. We're still seeing high energy costs. And if things escalate further, which Lord knows I am no geopolitical expert, I'm just kind of going off of what I read, my interpretations. But if Putin wants to escalate things further, which it wouldn't surprise me, I mean, we're not prepared for that. The markets aren't prepared for that, and it could get ugly in a hurry. So I think that there's just a lot of reasons to continue to be cautious, because it does feel like, even though we are down considerably from 2021, it feels like there's still too much enthusiasm in the markets. There's too much greed in the markets, and people are anticipating this bull market in the back half of this year. They're almost like relying on it. They have it in their head that's going to happen. And I think it's okay I think the downside risk is much higher than the upside. Like, I don't see a world where the chances of the markets ripping are greater than the chances of the markets plummeting. So I still think there's plenty of reasons to kind of hedge your bets, if you will. And that's what I'm doing by sitting, having so much in cash, while also continue to hold my long-term positions, because, I'm still relatively a young guy. I don't need a lot of this money in the near future, but I also don't want to get completely wrecked. So there are ways to play this market right now where you can take advantage of these little runs, but also be prepared to buy the dips when they happen. And that's what I am currently doing, and I think most people will be better off doing.
Yeah, absolutely. And 2 points on that. Like, today, Janet Yellen's in Ukraine, and she vowed to offer assistance to Ukraine for as long as it takes. Again, you could look at that as, obviously the United States is trying to help Ukraine, Russia. I really don't pick sides and stuff when it comes to stuff like this. I just look at it as a way of how is this going to affect the markets, and this will most likely affect the markets. Obviously, the more money that we are printing and we are sending, that's going to increase inflation. Always does. You always see inflationary spikes during wartime. But the other thing that was huge that you said was, people expecting a bull run in the second half of the year. I think people forget that the only reason that Bitcoin got to 69K was because how much money was printed in 2020. Like, the value, Bitcoin probably wasn't worth 69K in hindsight. Like, we look back at it and it's like, do we really think that going into the third year of a bull run, fourth year of a bull run, that we were able to push that high twice? We got to 50K, 55K in February, January of 2021, 2020, something around there. And then we just push up again to 69K at the end of 2021 in October. No, it was completely 100% because there was so much money in circulation. People were, we're able to start dumping into assets. But right now, we're just starting to see some of that contract finally. Obviously, Bitcoin's at what, 24K right now, around there, 23K.
Mm-hmm.
It's not necessarily a bull run to me. Obviously, we're going to see rates continue to increase. People aren't going to have the same amount of money on hand. A lot of that money has already been transferred to people who have, huge cash positions. A lot of people lost already. They already pulled a lot of their money out of the market. So when we think about the amount of money that retail has, it's just dwindling. So if we're not seeing big money on this, like put any money into risk assets, everything's on the side. They're cash positions right now, and retail is the only one that's buying in. How are they going to sustain it when there's no more, no more funds left to dump into the market? So I don't buy into that narrative at all that we're going to see any type of bull run in the second half of 2023. That just seems idiotic, and that's not financial advice. That's just me being realistic.
Yeah, I mean, we have the next Bitcoin halving cycle in early 2024. So, like, that would make sense to me as kind of a time for the next bull market to begin, because that will have been, if you want to say that the crypto bear market based on percentage movement started in like December 2021, January 2022, that would be like by the time the next Bitcoin halving takes place, that's like a 2-year bear market. And that seems like a reasonable expectation. So I just think that you need to have your expectations for the next like year or two in the markets like be on the conservative side.
Yep.
And to your point about like retail, buying into these things, everyone is like, I was reading an article yesterday on Bloomberg about how much money is going into the Asian markets right now, especially like in China and Hong Kong, and how even the big investors who thought they were ahead of it there are getting beat up on that one because like markets still aren't recovering the way that they thought. So I think to me, that was less of a reminder to like bet on those things and more of a one to be like, okay, just figure out where your niche is and concentrate on that through the bear market and the bull market, and not try to chase where the bigger institutional money is going, because by the time that story came out, it was probably already too late. The people who started that trend are the ones who are going to make the most money. And that article coming out from Bloomberg and people seeing were like, oh, I got to jump into the Asian markets now. Well, probably the bulk of those gains are already gone, if they even happened. So, have your areas that you specialize in. Like, don't try to be a master of none. Okay, like, or don't be a jack of all trades, right? Because then you're gonna be a master of none. Like, find your areas, focus on those. Right. You don't need to have like the ultra diversified portfolio where you got 20 different crypto tokens and 50 different stocks spread across every emerging market possible. Like, narrow your focus a bit, become, really well versed in those areas and make your plays accordingly.
I found another one.
Yeah,
they found another one,
chasing
Kevin.
gains right now is absolutely the worst possible thing you could be doing.
Yep. Do you want to dive into some of the charts?
They found another what?
No, do you want to dive into the charts?
You. Where are you?
Oh, God. You got me?
Yeah, I got you. You want me to throw you on?
Yeah, you want to go into... you want to go into... Oh, Christ. Here we go.
DXY. Gotcha.
DXY. Let's do it.
All right. Pulling it up. 1 second, J-Web.
This is quite the show we got going. Let me add it to the stream. There we go. All right, we got it.
All right, sweet. So we can see the DXY is pulling back a little bit today. Obviously, that we were pushing up for a while. We were in the overbought on the daily. You would not believe what it just happened. On the daily stochastic RSI, we're pushing up. We broke through this resistance at 104.661, which was huge to me because obviously that showed that we broke this and we're overbought for a period of time. I thought maybe we would have found resistance up here, but we're seeing a bearish engulfing candle. It looks like it was trying to be, but then we found, again, support right at this level, 104.6. Bounced off of it. We're a little bit above it now, but the dollar looks like it's still pretty strong. We've been talking about some type of retracement, so I'm going to be watching this over the next few days this week to see if the stochastic RSI comes down low enough to the reset area. That'd probably be priming us for a pretty good move on the daily going into the middle of March. So pretty something I definitely want to keep an eye on because that'd be pretty convenient with everything we're expecting in the markets. Let's go to the weekly. Weekly's getting into the overbought territory, obviously. I wouldn't be surprised if we get a red week this week, but we're just entering and we're undervalued for a long period of time. Obviously, from October, November to January. So us being overbought for a period of time would not surprise me. I honestly think that's probably the play for the dollar, especially if we get some hot data coming in. I think a lot more people are actually putting their faith into the dollar. Obviously it was undervalued for a period of time, but the more this data keeps showing that inflation spike, that consumers are spending more, the unemployment's a lot higher, the unemployment's a lot lower than we had anticipated, and jobs are continuing to be added. Wage growth is still up there. The dollar seems like a pretty safe bet for a lot of people. Again, I think that a lot of institutional players are, staying strong with the dollar. They're not going to be chasing any gains in China or anything like that. So that's why I think the dollar is staying strong right now. And obviously, if we look at the monthly, we got tons of room. We got tons of room on this monthly stochastic RSI. And obviously, this is going to close tomorrow. Tomorrow's the last day of February. We're going to see where this moves. If this is a slow mover, obviously we have tons of room to the upside to see it rip. And I don't know where it would go. I would definitely think it would go above 105.69. Potentially, I would think this would be a conservative area right here, 109. But I wouldn't be surprised if we got a double top at 114. That's just something to keep an eye on. Again, that's going to play out over the next few months. And again, we're going to have to watch risk assets and news and what's going on with the Fed and everything like that. Because I do think that the DXY is a lot more impulsive to reacting to news than we have seen maybe crypto and traditional markets react. A lot of those have just been, okay, we get a quick pump dump. Next thing you know, we're just going to act like nothing bad happened or no bad news came out. Whereas the DXY seems like it's a little bit more realistic, and it's following the trends of whatever the Fed's doing and how that's going to impact risk assets moving ahead rather than in the immediate now.
Okay. So I know I'm not much of a chart guy, but let me try to interpret some of this. So we are oversold on the monthly, which is closing tomorrow, but we're overbought on both the daily and the weekly, right? That's what you said?
Yes.
So that kind of lines up. Like, we're probably not going to see, I mean, with it ending tomorrow and not a whole lot of data coming out, we're probably going to see it stay oversold into next month, beginning Wednesday. But that almost perfectly lines up on the technical side and the macro side with the fact that we have all of these reports coming out March 10th through 15th, leading into a March 22nd Fed meeting that could lead to a rip in the dollar on the monthly and, the daily and weekly coming down heading into that. Does that seem plausible to you?
Yeah, that makes sense to me. Again, a lot of this is, I think the dollar is going to rip more like going into the second half of the year.
Okay.
A lot of this data, with like the resetting of the daily, definitely lines up with a lot of what we were anticipating from the Fed meeting and everything like that, all that data that's coming out. And then I didn't hear what you said on the weekly. I lost you for a second.
No, it's all good. Just that, with the weekly being overbought, and we're heading into these reports next, the 10th through the 15th, it feels like everything's lining up for the dollar to absolutely rip in mid-March.
Oh yeah, I completely agree with that 100%. And then again, like I said, the weekly being overbought right now, that thing could stay overbought for 6, 7, 8 weeks if it really wanted to. Definitely could stay overbought for 2 to 3 weeks for sure. But I don't think we're done seeing the dollar move. I think we need to pull it back just a little bit on the daily. So between now and the middle of March, and then we could see some explosive breaking some of those resistances that were once support, and we find them to be support again, and we just start making moves to the upside. And hopefully we take out some of the targets that were support for a period of time until the dollar hit 114. When did it hit 114? That was back in September. And it's pretty funny because that was around the time that everyone thought that the Fed was going to pivot, and they didn't. And a lot of people thought the Fed was going to pivot last month, or it's going to be not pivot last month, but obviously we weren't going to get any more raise, like 50 basis points or anything like that. So maybe it's a little bit repeating history. We're getting something similar to what we saw in September, maybe in March, but I think it might be a little bit more detrimental, like you and I have been predicting for risk assets going into this FOMC rate hike.
Yep, for sure. Okay, I think that's good on the DXY. Anything you want to discuss on the crypto side of things?
I had some other stuff, but I'll wait till we get back to Chicago for our Thursday show. Important thing that you need to remember is that the monthly close for Bitcoin is tomorrow. So obviously we're going to be watching that. We watched the weekly close last night, and it closed below the 200 EMA, which is again pretty good indicator that this market is. Where is this? I don't know why it's. Oh, that's because that's not my Bitcoin chart. I don't know where my Bitcoin chart is. I don't know why it's doing this to me. All right, BTC, USD, finance. Strange. My charts are all messed up. I hate Florida. All right, now we're gonna. I'm not lying there. All right, so if we just take a look at this, obviously it closed below the 200 EMA. This is the 200 EMA. Where is it? It's the blue line. This is the weekly. Let's go to the daily. Nah, all my charts are messed up right now. I'm sorry about that. But pretty much we closed below the 200 EMA yesterday for Bitcoin, the USDT pair on Binance. And that pretty much tells me that we're finding resistance at the 200 EMA. We got the monthly close tomorrow. The key level for me at the monthly is 25K, 25.28K. That's around the level that we hit the double tap, the one from back in, what was it, August of last year. And then we double tapped it again a few days ago, and we saw rejection at that huge key resistance. I don't think it could go up higher than that, but again, I don't underestimate liquidations. And if the market's really going to move or do anything like that, I would anticipate it being after the monthly close, and it would be before obviously the rate hike and all the CPI data and everything that comes out mid-March. I think that the market is going to move for a lot of liquidations between that now and then, but in terms of Bitcoin, looking at other stuff, obviously we're seeing a little bit of red. It was up a little bit earlier today, but we're down, say $305 at the time. I think that we're probably just going to be trading sideways until this monthly closes. We're going to close below the level of 25.28K, and we're just going to open up March and see if we can liquidate any positions before the huge liquidations come, which I still think is around 20K. So that would be a huge amount of liquidity that is just built up there from people who are longing at the wrong time. So we'll see. Again, that's just a game that's going to have to unfold.
Okay. Yeah. This does not feel like the best time to be longing, but I'm not a trader, so
To each their
I'll
own.
leave that to people who are smarter than me, I suppose. But still feels bearish to me. I'm still going to act accordingly, and I still think that using this opportunity, I'm still looking for opportunities to get money off the table before what I expect is going to be a pretty nasty pullback in the coming weeks and months.
Yeah, I completely agree. It's there's opportunities in different sectors maybe. Like, again, I looked at natural gas and I was looking at oil, and obviously neither of them have moved much, except natural gas has been moving pretty well. Like, I remember it was at 240, I think, when you and I were talking about it. Now it's at like 259 or I saw it this morning. So, pretty good percentage, like 4 or 5% it was moving. But I don't know. Right now, everything just seems like cash is king, and don't fuck with that plan. That's for me, that's what it is. I just don't want to do anything too stupid right now, and just make sure that I'm covered so that if this thing does get really bad, which I do anticipate it to get to, when the opportunity is there, you could just have the maximum amount of powder just to dump into the market. And, your money doesn't have to work nearly as hard as if you're longing here. And obviously you got to hope that people don't pull the rug on you. So that's just what I'm seeing. A lot of stuff from global to financial to, I don't know, just anything could really happen right here. And there's a lot of uncertainty. Obviously that's why we're seeing some volatility and the VIX pushing up a little bit. I think that uncertainty is just proving to you that more people understand that it's probably going to get worse, but they're just hoping that it's not. So that's just something that I'm seeing, and that's what I'm going to stick with.
Yeah, it kind of gets to the point where you think to yourself, okay, it hasn't gone down too much. Maybe I'll dip my toe back in. But the market makers are going to keep the market high until they can get as much liquidity in it as possible. And then that's the moment where they're just going to pull the rug out from everyone. Capitulation is going to happen. We haven't seen it yet. So, it's not easy to be a bear when everyone is telling you that it's time to become bullish. But if you're, there's signal versus noise, right? Like all of the articles on Bloomberg, on CNBC, all the bullshit from Jim Cramer saying that we're back in a bull market, that's just noise. And the data points that we're getting, that were consistently coming out, paint a completely different picture, that's what the Fed is going to act on. That's what's going to dictate policy. That's what's going to actually move markets. So if you have your thesis right now, if it's bearish, continue to question that thesis. But if all of the evidence is telling you that you're right, stick to your guns. Don't let the sentiment, however misguided it may be, impact your decision making.
Yeah, absolutely. Let them call you stupid or a bad trader right now. It doesn't matter when you're rich because you did the right thing and you played this the right way. So that's the only thing that's important, how much you take care of yourself and do well in this market.
Maybe you're a bigger person than I am, but maybe save some of those receipts as well so that you can, when those people are wrong who called you stupid, you can shove it up their ass. But maybe that's not the best way to take. I'm petty, so I might do that, but maybe I think that's going to wrap it up for today. Kevin, any final thoughts before we head out?
Nothing too crazy. Obviously, there's things to watch. I would just be in the crypto markets, look at Polygon. Again, it's trading in that macro bear flag. We're seeing it come down to test that bottom parallel channel. That's something that you definitely want to keep an eye on because I still think that's going to be a massive drop. Watch out for Binance. We saw that Coinbase delisted the BUSD pairs today. And again, that one theory about who's been propping up this market, maybe it's true, maybe it's not, but no exchange right now is safe. I don't have any money on any exchanges, just full disclosure. So just keep that in mind. And if we're looking at global events, obviously Janet Yellen, take a look at that. The war could increase. It could it could, what do you call it?
Escalate.
There we go. Sorry, I got 5 billion people talking behind me right now. And then
all good.
And then just keep an eye on gas prices. Like that's probably one of the best indicators to see if inflation's going up or down. Energy is still a huge part of the calculation. Just that's a simple way to know if you're doubting yourself. Be like, hey, just driving by the pump, what's it look like? Is it higher than last week? Was it higher than last month? It's a very good indicator to remind you that, okay, this fight's not over. There's still going to be a lot more hikes. And, people are probably going to, the people who are saying that the worst is out of the way are probably going to be the ones that hurt the most. So.
Gas and eggs, man. They got the limit 2 cartons for eggs back at the grocery store. It's never a good sign. But that's going to wrap it up for today. We'll be back Thursday afternoon for our end of the week show. We'll have everyone, give an idea of what we saw with data, the Fed chairs speaking, all that good stuff. So once again, thank you for watching. If you've been here with us today, please hit that like button, subscribe, drop a comment. All of these things help us with the algorithm. We want to try to get as much of our content out there as possible. If you enjoyed it, please share it with anyone else that also likes the market. Love to hear from them, get feedback, all that good stuff. So for Kevin, for the team over at FLOLiO, I am Jeremy. Have an awesome rest of your day, everybody. We'll be back on Thursday.